Welcome to the People's Economy Podcast, the only podcast where we keep it all the way real. Our mission is to educate you, empower you with knowledge, give you some education financially. So now that we're building a following, some of the questions we're getting is people want to know like how to evaluate a stock, how to get in at a good price. Basically, they want to know how to find stocks on sale. But I've been doing some research. I think it's all about the timing of, you got to be patient and think about what's gonna be your entry level on that stock. How do you go about, when you buy into a stock? How do you pick your entry point?
Hmm, that's a good question. I think sometimes I take maybe people I take advice.
Mm,
Obviously, I think people should. Sometimes I'll go in if I do my research. If somebody tells me a particular stock or a direction to point, I'll do my research on it. And if I like it, maybe sometimes I will just jump in and just
mm,
try some things sometime. But from what I've from I guess like the basic term, and maybe if I'm wrong, tell me if I'm wrong. It's almost like you want to buy on the come up like a V, like you want to buy on the other side of that V where it's kind of coming up but not quite yet, and that's hard to tell. That's what the whole hard part is. It's not easy to find that, but that's when you want to find. So when the time when the stock market is really at a uh, let's say a recessed place, that's probably the time that you really want to buy because then you could. That's when all that will rise. Because if you look at the history of the stock market, there's always crashes and then it always comes back. So you just got to be in it to win it. So that's the patient part too. You got to be in it to win
yeah, the bottom of the V's, but we all want to catch it. That
it.
would be
Right.
ideal. I guess some
Right.
tools you can use like what they call a PE ratio,
Okay.
the price earnings ratio. You can let's just say you like a stock like for example, a cloud stock like Twilio. Maybe you can look at other stocks in the cloud space and see what their PE is and their market cap, and kind of try to like strategize a price target based on that and when you want to buy in. And as well as you can just Google any company and you just start reading. You just basically start researching each company. Maybe make like a watch list of stocks you really want to get into. So you make the watch list, you have it set up, and then maybe you have a market cap and a P ratio where you're going to buy in at that price. So
Okay.
sometimes you have to be patient. You might have to wait a year or two. But then when you buy in, like, I know how some people, they get impatient. You think your money in the market is better, but not necessarily, because if you're going to buy it, then ride it down, ride it back up, you are better off being patient, holding your money on the side, and buying in when it does dip and just ride it all the way up rather than being impatient. Like you were saying, you want to be patient.
No, that makes perfect sense. All right. So with that being said, as far as your entry point, how do you learn how to get into the entry point, and once you're in, like when do you learn when to buy and being patient and holding out. So when I'm let's just say person whoever when they're looking for the stocks and they see all these potentials, how do you think there's too many stocks somebody can have? Is there too many to have in your portfolio? Do you think there's a a set, not a set number, but do you think there's an ideal number of stocks, or is just as many as you could get? You should collect. What are your thoughts?
I wouldn't say as many as actual stocks, because if you have like 10 good stocks, you may want to buy more heavy in those 10 and then just keep
Okay.
buying in when it dips.
Okay.
Go for because if it's a great company, like, you want to own winners, you want to own stocks that either grow in value, grow in price, grow in dividend. So you want stocks that are going to go up over time. So you
Right.
rather own like two growth stocks than like one stock that's going to grow than one stock that's going to stay the same for years. You rather put more money into that one stock that's going to grow
Got you.
and maximize your gains on your investment.
Okay. So that's not not necessarily spreading out yourself so thin, but making more sound investments. That's what it. That's probably more of what you need to do, or a person would ideally what they would want to do. Make sound investments. Maybe you want to buy, like you said. Maybe you don't have as many, but the ones I have are making my return that I like, so I'm going to keep investing in those 5, 7, 10, whatever the case may be. You don't have to have this long list of things, of assets, I guess, in the market.
Yeah, then you want to buy like you want to buy on like you want to what's called average down. I mean, you buy on the day that the stock is dipped. Like the famous
Okay.
Warren Buffett saying is be greedy when others are fearful, and fearful when others are greedy. That's
Mm,
like a basic statement you can follow when
mm,
buying into these companies.
mm, mm. Yeah, that makes sense. That's a good one. He would know, right? Mr. Buffett's a good, it's a good, that's a good example of being patient right there. That's a good example of being patient. That's what it, that's what it can do. But I think those are good, touch points for someone who's coming in and wants to invest and wants to learn how to actually, when is the good exact time to, and what are you looking for when you come in?
Yeah, and once you get in, you want to continue to educate yourself because you'll see like a 5-10% return. Then you'd be like, what if I get a 20-30% return? Then you get more hungry. So yeah, you gotta take that first step and get in. And once you start seeing gains, you kind of really see how the market really moves and the potential that is out there. And then you get more hungry to learn more. See if you
Right.
like if you got 10% gain, then let's start you got 20%. And then once you see like a 30% gain, you're like, where else can I get this? You get that taste in your mouth.
It happens. It happens because it's good. It's nice to start seeing gains. The gains, the gains are what you gotta like fight off. You gotta like be like, all right, it's not even about that
Mm.
initial. It's about the long term. It's about the long term play. Even if that looks really great right now, it's about the long term play and keep reinvesting what you know. That's definitely always the start. That's definitely always the start. Reinvesting in things that you know. And like you said, you can't have too much, but you should be more keen on the stuff that you do invest in.
And you can have like number. You can have as much. You can put as much money as you want into the market. There's no limit on how much you should put in, but you may want to focus on what companies you're going to put your money into. That's going to give you the returns you're looking for. I guess everybody personally has different goals. They have to sit down, write down why are they, what are they investing for, what gains are they comfortable with, where do they want to be, you know.
Right.
Mm. But I would
Another
go
person.
for the biggest growth. Like why go for like quarter of the pie when you can have the whole pie? It's like
Right. Right. Swing for the home run. Might as well get the home run. Let me get the home run then if I'm gonna do it. If I'm gonna do it, I'm gonna do it for the home run.
yeah, when I hit the
That's
grand
it.
slam, I'm not trying to get the
Yeah.
first base. Like
Yeah.
because you get the first base 10 times in a row, now you're like, I need a double. You know what I'm saying? Like,
Right. Right. Right.
it's
Right.
like, what if I
Right.
hit
But
the grand slam? I can retire early? Like, what are there's two
but first
possibilities in that
first
market.
base first base is good though.
Yeah,
At
yeah,
first
at
it feels
first,
good to get to first base. Like, oh
yeah.
okay. I got the bat out. I swung, I hit the ball. All right. I'm good. So once you do that, I think that's when you get your first taste of the market. But speaking of, not to segue, you talked about personal, like your own personal investment and growth, and how do you want it to be? What do you think are things maybe now that people can add as far as supplemental, uh, uh, I guess, jobs or ideas or streams of income? How do you think people shift into the new market with all the changes that we've seen now? It's been about 7 to 8 months later.
I mean, you can start simple, go right into your garage. Go through old baseball cards, old antiques you have, put them up on eBay, Amazon, Etsy. If you do arts and crafts, you can you create a piece, you can put it up on Etsy, try to sell it on there. Really just get
Mm,
creative.
mm. So really use, and really a lot of it would be through social media and all those kind of platforms. You should definitely use those to your advantage. People have a lot of things in their home that they probably don't even know like are worth stuff or people would want, you know. So things like what I think is OfferUp, uh,
Mm.
well, things like that, places like that, eBay, even maybe Amazon. If you start up on a store or just sell things on there, you can at least get the idea of what it's like to engage in transaction, business transaction, and you can make some money too while you're doing it.
I mean, who doesn't want to make some money with something sitting around in their basement? You know, might be worth more than you think. You might come up on a big score.
That's true. That's
Right.
true. That's true. People have found a lot of crazy things in their garage, like cards, all type of things that they didn't even know they had that are worth a lot of money. So I think the market is definitely like you could be innovative now. Though. You could kind of make your own space too, like that. Maybe there's not even maybe something that's not even there yet. You could probably make that now, like a specific, like for instance, like a specific cleaning service just for everything that's going on. Maybe people want that, like just for that, like they're trained in what's going on and can clean your house. And this is how we do it. The filtration, which leads to the filtration systems, they got to be set up for that.
Mm.
Somebody has to manufacture that. So I think there could be whole new things like that are not that weren't even around before that people could do, and a lot of them will be able to. You also be able to skip the line to some degree because if enterprise is just online now and it's more open, you don't. It's not as stringent like education. You don't need a degree to do
Mm.
online and do it. You know what I'm saying? You can skip. You can go straight to. I'm making income, becoming, building my business. I'm CEO of my business. I own it, and cut out a couple years if you have to, like, or if you really can. But I think it's definitely wide open now for people to do. Like I said, make up your own thing, figure something out, find the market, figure out what the price point is of it, and go for it. That's how you do it.
Yeah, you can even do wholesale too. You can buy things from like Alibaba
Mm,
to your house, buy and
right.
wholesale them both, and then sell them on these platforms, even on your social media page, one at a time for a markup.
Yeah. No. You're definitely right. Do you think well, I know we have Amazon, but a company like Alibaba, with all the sometimes volatile, let's say volatile trade, do you think if you're someone who has a business and uses Alibaba, and with all the volatileness, however you look at it, do you think that they should worry about that, or and have like a backup, or should there be more manufacturers? Should there be more maybe domestically, or whatever the case may be?
That's a great question. I think Etsy is things you actually create yourself. So I
I
guess
think you're right.
you have to
You're
be in,
right.
like you said, you got to diversify, got to be in different lanes. You need an
You're right.
Amazon store, a Shopify store, Etsy store, Alibaba. You make stuff at your house and sell. You got to hustle.
Oh
Every
man,
corner
you're right.
all
You're
about the
right.
hustle, right?
You're right. You're definitely right. You're definitely
Alibaba,
right.
like is the you're saying like the transporting products back and forth to China,
Yeah,
right?
yeah, yeah. That's what
You
I'm
got to
saying.
start making stuff in your. You got to the Etsy store got to come up. Then you got to make
Right,
some food.
right. Then you
Great.
really got to make it. You really got to make it. Get with some people, like here, like around, and make whatever
Mhm.
you're trying to make. I think there's a market for that, because if that can add value to the economy, of course it's going to be accepted. In if we could add value through that into the economy, into the bigger economy, that will be accepted. If you could, if they find a way through an Etsy, and that becomes store, because they're going to have to, because a lot of retail is going to move to be like not an Etsy, but going to be like an online mostly store, and they'll still have locations, but it's not like how it was. So if they're going to do that, I think other places are gonna definitely do that. Other businesses that you make are gonna try to make that switch.
I mean, on those 3 or 4 platforms, you can really set up like you pick Amazon, Etsy, use Amazon, Etsy, Facebook, Shopify. You can set up the stores and then sell on those platforms, take the profit, and then buy the stocks with the profit.
You can.
You really covered. That's like a full portfolio you built yourself.
You definitely can. That's a great point. That's a great point. See, that's called working smarter, not harder. You know what I'm saying? You're making the money work for itself, then you go back and invest in even in a different way into the company. And that's a great point because a lot of people don't do that. I feel that's why if you're gonna, even if you have, let's say you like to buy things, you like to buy nice clothes, maybe invest in that company that you like to buy too. Buy that stock. If you're gonna wear the clothes, you know what I'm saying. You might as well get the other side too. Get on the other end. I mean, am I wrong? And when you buy a stock,
Nah, I got
technically you're an owner of that company. Like you're buying a share of that company. That's what you're kind of. That's pretty much what you're doing in theory. In theory, that's what you're doing when you buy a stock.
so
So why not?
I got a simple formula for the people out there right now. Next
Okay.
time you're gonna buy a pair of Nikes, instead of buying $250 pair of Nikes, buy $120 pair of Nikes. Take the other $120 and buy a share of Nike every time you're gonna buy those $250 sneakers.
Mm, mm, mm.
So one
So
twenty
like
on the stock, 120 on the sneakers.
mm,
Invest in the products you own. Keep it simple, like you were saying.
See, that's good. That's a good formula. Definitely a good. Anybody could follow that. That's simple but good, clean.
If you have like an Apple like laptop now, and it still works, instead of buying a brand new, you buy an Apple laptop every 2 years. In the next 2 years, take that $1,000 and buy the stock of Apple, and then wait another 2 years and buy another computer with that profit. I mean,
Right.
you get smart now, right?
Yeah. You make it work for you. I think that's the new way. That's the new way to do business. People are getting more savvy about things like that, though. I think people are starting to learn that you got to have another more than another stream, but a couple streams. And it works too. If you just learn how to, if you put the time in, I think you can have another biz. The ecom business uh is definitely going to be growing. I mean, there's a lot of chains that went out this year. Um, in like 4 to 5 months alone. So if you're not ready to switch to your online platform and sell your thing online and have a marketing plan for whatever you're doing online, I don't think you're gonna make it as a brand. You're gonna need both. You have to have an online presence now. Everything. You have to have an online presence. Even small business, little restaurants, the fried chicken spot, they had DoorDash. They have DoorDash now. You know, they have some form of internet connection where people could interact through the internet with a little chicken spot in Brooklyn or Queens or whatever. Okay, so they even have that. So if you don't have that, if you're not ready to switch and pivot to uh, that format, you're not. I don't see you as making it through very far.
And some of those companies are actually traded publicly. Like you can buy Uber, which covers Uber Eats.
Right.
Um, you can buy, of course, Chipotle stock, which is real high right now.
Right. Chipotle is always. I can tell it's a hot stock because the store is hot. It's always good. They always do business.
They're
They
actually one
have
of the companies that did better during these times than like
it
regular.
makes sense. It makes sense. It makes perfect sense. I can see that. It's not even shocking at all. I can definitely see that. They have a I think like a company like that. I think they branded themselves very well. They've done a great job of branding themselves. Like from the name, it's just
And like
Chipotle.
being
Yeah,
like new trendy cuisine.
yeah, right. Even though it's not new, nothing's new.
No, the basic burrito, but the marketing is
But the
destroyed.
marketing is destroys. It's just like, oh, okay, this one's better though. This burrito is better. You know what I'm saying? Or this bowl because they got the bowls too. It's like good to go stuff, and people love that type of food. So it's just it was a home run. That's literally not reinventing the wheel, just putting the hubcap on it to make it look different. That's what they did. And then look what the stocks do. So something like that. See, something like that, people could pay attention to. Sometimes there is a direct correlation between, let's say, a chain like that where you can see. I go in, I see there's a lot of people. There's a lot of people doing transactions, and when I go to other locations, I see wow, there's a lot of people. That usually gives a good indication of that actual company. So you should pay attention to things
Yeah,
like that.
every time you turn on like Jim Cramer, he has the CEO on there, or you watch even CNBC during the day. They're talking about Chipotle is doing better than all the old companies like McDonald's and all that. They're saying kind of invest in these future restaurant companies. Like I think actually we cracked the formula on this episode with this. Like work at Uber Eats, take the profit, and then invest in the
Pretty
stock.
much,
Like that's the good
pretty
formula.
much.
We
That
should
is a good
probably go for
formula.
that formula, right?
Right now, you're probably right about that. That might be the code, though. You do your job, whatever your job is. You go back. You have to invest a certain amount back into buying parts of that company, and that's how you make your stream. You almost make your stream off your job, like you make your stream off your own job. Most people don't do that. For how simple that is, most people don't do that. They don't do that. They're not gonna. But no, I didn't think to invest in my own shit. I
Hmm.
just think people just don't do. They're always going for the Apple and the. Nah, invest in your own. Get it popping, or reap the benefits as much as you can from it,
Hmm.
and that's your way of not being so stuck. You know what I'm saying? That's like your own plan to not be stuck somewhere, even if it's a little, maybe a little dividend you get off that or whatever. You know what I mean? It helps. All of it will help if you just get as much out of it as you can. That's really the name of the game. That's
I mean,
true. That's definitely the formula.
you work for Uber and you only buy one share a year. You have 52 shares of Uber at the end of the year. So you have your job and your own retirement fund right there. Like you kind of
Right,
yourself.
man. If I'm a Uber driver and I'm doing Uber Eats, I'm definitely buying shares of Uber every time I do a delivery. I'm trying to buy a share of you know what I mean, like
And Uber
that.
pays you like bonuses. You don't even got to use
Right.
it. You make if you do a certain amount of deliveries, you get like a bonus. You take that $30 bonus and you go on your Fidelity account, your Robinhood. You buy a share of Uber, then you go do your next delivery. I mean, we got
Mm.
to create our own lanes nowadays. You know,
Exactly.
it's a different.
Every pair of Nikes, you got to buy one share of the company that you buy. If that's your joint. So that means you got to have enough now. Now you got to talk about can you afford to do that because you got to have enough for your Nikes and
That's
for
what
the
I was
stock
saying.
summit.
Always buy $250 pair of sneakers. Buy 120 pair of
Yeah,
Nike, 120 in the stock. Boom.
and that'll pay off because Nike's going to be around. Nike's good. So
Especially
that's
now because with the outdoor wear and jogging and hiking
right,
and
right. People are more outdoor now.
you can
People are more outdoor.
sleep on those outdoor company stocks too.
You're right. You're definitely. Why you think they'll bounce back?
Yeah, they're already saying like outdoor sporting goods stores are
Okay.
seeing increase in volume on their websites and their stores because
Mm,
everything you people feel more comfortable outside now in nature.
right,
You know.
right. Makes sense. It makes sense. There's places where you can have open air. People would rather be there than in a crowded mall or something like that. Whatever. So that makes sense. That definitely makes. But see, that's just paying attention to almost what people are doing. Like I said, just sometimes pay attention to where people are going. What do you think? Do you want to be inside right now, or would you rather be outside doing some outside thing away where you can space out? Most people are going to say they want to be in some outside where they can space out, and that makes sense. Why those type of places are doing better right now? It makes perfect sense. Logic.
Yeah, I mean, if
It's
you're
not
gonna
that
go
hard.
hiking, you got to go buy a new pair of hiking boots. You're gonna go canoeing, you got to go buy a canoe,
Right,
vest, and
right.
all that, paddles.
I bet you, like the camping industry is doing well too, probably.
Yeah, that's what I'm
Like
saying. I
right?
think
Like all that camping, outdoor woodsman. I'm gonna be outside. Matter of fact, a friend of mine was telling me he's going on. He's renting like it's like a house, but it's like in the woods, but it's like a simple like it looks like a box, but it's a house that you could rent. So almost like your own personal cabin, like a 1 bedroom cabin, so you could go, take the wife, whatever, and there's a company you could rent it. You could rent it out for a week, and that place alone, I think the next appointment you could get was like December for that. It was like December. You couldn't even like get into that to be in the woods in a little cabin type thing on your own, but like a modern cabin. So things like that, it makes perfect sense what you're saying as far as the outdoors and stuff. That's exactly where it's gonna go. That's
Yeah,
exactly where it's
and I
gonna go.
was just gonna say that kind of goes back to real estate because now you can start looking like Pennsylvania, upstate New York, and
Right,
buying these like little cabin properties to rent out.
right. If you're smart, get you a little Airbnb in Pennsylvania real quick. You know what I'm saying?
Or
If
in
you
the
want to just
Catskills where the real estate's
right,
pretty cheap.
right, where it's cheap because it's cheap up there. You can get debit card. You get debit card a house up there halfway. You can
Mhm.
halfway debit card a house in the Catskills, or definitely get it for the low, and then rent it out. Because even if you got it for especially now, if you bought a place in the Catskills now, your interest rate is going to be ridiculously low. You're
Yeah.
paying like almost you're paying as low as you could probably go on interest for that cheap place already that you're getting. So even if you renting that place out half the year, you're still coming up off
Mm.
money. You know, so it's that's how you do it.
Yeah, because when you rent something out weekly, it's like more than what you would charge a month. When you rent things out
Right,
weekly, people will pay
right,
that premium for a vacation home.
right. That makes sense. You rather more chop it up, and you want to chop it up into weekly. You rather people coming in, new people every week, or you can rent it for as long as you want, but at a weekly rate. It's at a weekly rate though,
Mhm.
so that makes perfect sense. And then you making that's super premium. Your Catskill house is paid off in 2 years. You paid off your whole Catskill house, or maybe less if you
And
just
then you
really
can
go at
probably
it.
sell it for a profit because people moving out the city, upstate, is going to bring those equity up in those properties. The value is going to go up. So you can
Right.
probably sell the property in 5 years for way more than you paid for it now because more people moved up there.
That's true. That's true. See, you're right. Because as people go, as the times move, as they're gonna go, people will be going up there because that just makes more sense. That's where the land is. More land up. If you go up, so that's and it's at a premium price now. But I feel like that didn't quite. You could probably still get it. You could probably still get a place in the Catskills right now. You
Well,
know how Westchester and all that was ridiculous that first like 2 or 3 months. It was crazy to get in Westchester or even Putnam. But maybe up there, you probably still people are still not really thinking that far out to buy a place in the Catskills yet. But it's smart to at least look at it now.
yeah, I think a lot of places that weren't like people weren't looking at before to invest in real estate. I think that all changed in 2020 though. You got to
Mm,
keep your options open
you're right.
because if they're fleeing cities working remotely, the place to invest is not going to be the city no more. It's going to be these upstate areas and away from
Right.
the city areas.
Right. No, you're right. You're right about that. That makes perfect sense. That makes perfect sense. That's just a natural thing, or well, I don't know if it's the natural thing, but that's the thing that people are doing now. They want to move upstate or out. They go to Long Island too, or you want to go out where you can stretch out somewhere. And the city is less now. The city will need, the city will almost need to be refurbished at one point. It's going to need to be like refurbished because it's going to need new energy because I think it'll always be around. The infrastructure is there for New York City to be around for a long time, but it definitely will be different and things will have to be changed. But I'm not mad at somebody investing in New York City as well
Yeah, of
as far
course.
as trying to get as far as trying to get in because that's I think New York City is like it's like the living it is like the living stock market. It's like the actual it crashes. There's a couple times when New York City has been pretty bad, but it always comes back up. So I think it's not a bad idea. You might have to ride a wave for a little bit. It might definitely be a wave, but I think it'll eventually come back up, and then you could reap the benefits of that too. So don't people should just look at. I think you just look at your options either way. What makes sense to you?
Or even like if you can go to Long Island and find like a house that needs rehab, you can
Mm,
buy it cheap, fix it up, and flip it. That's not a bad idea either.
that's not a bad idea at all. That's not a bad idea at all. If you could get out there now, Captain. That was like the great migration to Long Island. But you probably still can. You could probably find a fixer upper out in Long Island and Valley Stream. You could probably go to Valley Stream and find you a fixer upper that that you could flip for a good amount because it's in a good location, not so far from the city, kind of close, kind of sorta, worth looking into.
Or even Jersey too. Jersey's hot right now with flips.
Jersey makes sense too because Jersey's like how the city is so metro. Jersey's the suburban version of the city. In a lot of places, not everywhere, but in a lot of places in Jersey, it's pretty much suburbs. At least in northern Jersey, the middle Jersey and lower is like rural, but northern Jersey is pretty much like suburbs, so it makes sense. You can have a pool in your backyard in Jersey. You can have that. That's like kind of regular. You know what I'm saying? So people definitely want that. Those kind of those kind of like properties alone are commodities. If you have a pool property right now, oh
Hmm.
my goodness, you're killing it right now. You have a property with a pool. We don't need to go nowhere. We can just come here. I got the whole backyard, all that. You're good. So a place like Jersey, you can have that, and it's probably a good amount of inventory in Jersey too. There's a lot of houses in Jersey, so it makes sense. Jersey's not bad. Jersey's not bad. You just probably pay a premium Jersey commuting, maybe. That's the only thing you got to
But
be
lot
ready
of
to do.
if you're working remotely,
Oh, true. That's true. Now you're right. If I don't even have to go over to, or like once a week, I got to go to the office, whatever. Whatever. You're right. That changes a lot. Then Jersey looks way more appealing now. Now Jersey looks way more appealing because I can be close to New York, but still have I got my driveway, I got my backyard. I don't live right here in the midst of everything. So it's a good example. But people are looking at other things to invest in order to try. And real estate's always going to be the one.
yeah. But now speaking of like working remotely, at first like productivity was good, but now they're saying people are starting to slack off at home now. Like they might have to come
Yeah.
back to the office. How you think it's gonna work out?
First of all, I think I could definitely see that. That's that. I can see people like now they're kind of like, all right, this is gonna be. I think people have just whatever,
Got
whatever.
comfortable, right?
Yeah, like whatever comfortable place they had to get to, they've gotten to it. They're just like, yo, I'm here, so I'm just gonna go back to halfway to my old routine. I think some people just want to feel normal, so they're just like, I'm just going back to my old. I'm just gonna be me. I'm gonna be me now. I'll be slacking off sometimes, and that's just how I am. Because before it was like, I don't even know if I'm gonna have a job. I gotta
Hmm.
do my best. I gotta see. You gotta, because some of these, just from talking to people, some of these jobs that people had, especially more in the tech industry or people that I speak to, they're doing better now than what they were before. So they're like, they're like, we doing even better now. So like, this is
Yeah,
a
that's
whole
what I'm
different,
saying.
right? This is a whole different wave now. So now, we got to keep the incentive up for you to keep doing a good job at home. Being remote, because now we can actually pay you more. We can actually give you more after this
Mhm.
whole thing because we had to switch onto a online platform, and now the online platform is doing great. So our numbers are crazy through the roof. And now you could live in Jersey and work remote, maybe. But
I agree with
uh,
you. It's all about you have to have an incentive and maybe communication. Like you have a Zoom meeting with the staff every day, make sure everybody's on board.
right, right,
Communication incentives. I think you're right. Yeah.
right, right. Yeah, 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 yeah. More like yeah, you have leadership meetings. You know what I'm saying? Where you like, all right, this is what we're doing. We speak for even if it's a half. All right, this is what we're gonna. Like you said, every day you speak for a half. Everybody, the team's there. Y'all do what y'all got to do, and everything else is pretty much hands off. Y'all do what you got to do. We just we come back to it tomorrow for a half hour and go through it. Y'all could if you have an online job, you can even do like weekends different. It could be Friday. It could be not. It don't have to be the traditional Friday, Saturday, Sunday. I'm weekend. It could be like you could have a Monday and Tuesday schedule too, and work during the day on this day, and then on the night on this. You can have an overnight job probably if you do online. Depending on what sector that you do, but it's definitely possible. All that stuff is definitely possible. It's very open right now.